everyone forgets that in 1999, the glamour stocks were stocks like Lucent and Sun Microsystems because companies were going public, buying routers at Cisco and servers from Sun and doing their thing. And then when the money disappeared to fund money-losing IPOs, Lucent and Sun died. This time, it's advertising. So Beyond Meat goes public. So what do they do with the money? They're going to advertise at Google and Facebook from here to eternity. And that's deflationary because a company losing money is driving the economy.
All right.
And Amazon is the king of this. Their core e-commerce business has never been profitable. So what happens? This does not change until the economy gets strong enough on its own. You and I have talked a lot about coalescing millennial buyers. They're going to be the future, no question about it. And when they're strong enough to carry the economy on their own without a tech euphoria episode, the capital will switch from seeking what it's been seeking the last 5 years, which is TAM and disruption and
total addressable market. All right.
Exactly. So you get the idea.
I take your point. So, Greg, how strong do you think the U.S. economy can prove to be, given the headwind that we're now facing with tariffs and what looks like a pretty slow global growth environment?
Well, I think overall the U.S. economy is starting on relatively strong fundamentals as the trade tensions escalate. So we still have growth that's in that 3% range. But as we start to see building tariff pressures that restrain growth, restrain activity, and actually lift prices somewhat on a transitory basis, we're going to see growth slow. The key question is how much tariffs are going to be raised in the coming months and how fast growth slows, because we are on a slowing momentum path with fiscal stimulus gradually dissipating. The U.S. economy is expected to slow.
You heard Larry Lindsay just a few moments ago say he's not sure that the Chinese leadership actually does want a deal, that they want control of the economy instead. What happens if there's no deal? Is that good or bad for the U.S.? I guess the assumption is no deal leaves tariffs in place.
I think there is likely to be a situation in which we see tariffs lingering on for a long while. Historically, when we look back at the last 30 years, tariffs tend to stay in place for multiple years and don't dissipate. And we know that the administration has not taken off any tariffs off the table so far. So we're more likely than not to be in an environment, even if there is a deal, where tariffs, at least some of them, stay in place, and that continues to hurt growth. We've looked at the impact of these tariffs, this latest escalation, and we think that drags growth by about 0.3% over the course of the next 12 months. So that's a significant drag on growth from this latest round.